Yep.
Yep. So, hello and welcome everyone. Today we have awesome guests from Evai. We have Professor Andros and Matt that will be talking through this awesome platform on how you can navigate through the world of crypto. You guys have developed a really interesting system on rating and kind of looking at all of these different metrics that can really be useful for anyone that's trying to navigate this very complicated world. So please give us an intro. How did you guys get started? Please let me know.
Yeah, okay, well, I'm Matt Dixon. I'm the CEO of Evai.io. I've been a trader all my life, since the mid-80s, believe it or not. So throughout my trading career, I've lived through many market crashes, and it's been quite interesting to learn hands-on exactly how the markets work. And we saw the last market crash, 2008, and I actually made a lot of money in that crash, selling the Australian against the yen. But the reason for the crash was basically a failure of ratings at the time. So in my latter years, I did a master's degree at Brighton University, and that's where I met Professor Andros. And we discussed the shortfalls of the current rating system and how we could potentially improve it. And this is really how we met. And in 2019, I spent the latter part of that year writing the white paper for Evai, the ratings model. And that was actually following the master's degree and discussions with Andros and other professors there. And that's really how we got into it and created something which is completely unbiased. I think it demystifies and provides transparency for everybody. And I just think it's an amazing tool. So really excited about it. So that's just a little of my background. I mean, I've worked with the World Bank as a consultant to the World Bank. As I say, I've been a trader most of my life. I've run a regulated algorithmic trading fund in London, trading FX at the time. And that's the main part of my career. And Professor Andros, over to you.
Professor Andros Grigoriou. I'm a professor at the University of Brighton and a visiting professor at Peking University. I essentially started in academia in 2003, and I've published over 125 research papers. I have developed models on my own liquidity measure that's used by the central banks, and the Bank of England has used it. I've also advised hedge funds, financial institutions, financial regulators, and essentially my research was based on asset pricing models, prospect theory, and technical analysis over a number of years. And I met Matt at the University of Brighton, and we discussed that in this new world of digital currencies, there needs to be a rating system, and it needs to happen. But we were faced with a very interesting challenge, which we feel we have overcome, which is we didn't just want a rating system that was free from human bias and was simply driven by technical tools, because the problem with that, there's no underlying theory behind it. So we did want the underlying theory that's been established by Nobel Prize winners over the last 60, 70 years in finance, but we wanted it free from human bias, which is obviously one of the big issues with other rating systems that there are in conventional markets. And we've actually combined two schools of thought. We have got the fundamentals, we have got the theory behind them, but we are using AI and ML in a sophisticated way to actually give us the best fit of these factors. So from the investor's point of view, they are getting an unbiased system that has the best fit, but also has an underpinning theory which has been established over a number of years on Nobel Prize winning research. We are extremely excited about this. We feel it's really groundbreaking, revolutionary, and that everybody will benefit, from people who are simply interested to day traders. And we feel that it is vital in this market and something we are very excited about, and we want to disseminate it as widely as possible.
This is so exciting for someone that's been trading and been in crypto for quite a while now. It's there really has been something like this missing, that is just specifically unbiased. There's just so much noise that can be in the system, and when you have something that can really take take away a lot of that media noise to get a proper sentiment or a proper like data on everything, especially with so many coins popping up left and right. Just being able to really break these down is going to be really groundbreaking in general for crypto.
Yeah, I mean, as you say, it's something that's much needed. So it's partly it was conceived out of obviously the financial crash, particularly of 2008, which was a failure of the ratings. And one of the things that I said on our master's course was that, you know, The Big Short, if anyone knows The Big Short, the film, that was a large part of the inspiration behind this, because obviously that just demonstrated clearly how, you know, where the bias arose and the misallocation of assets. And with this crypto world now, there's about 18,000 different crypto assets. And even today, with this market turmoil that we've seen, it's more important than ever to give people transparency, to sort of empower them to make better investment decisions and to look for true underlying value. And that's really what our, you know, endeavor was all about, trying to help people. I love it. It's a business that basically it's positive for everybody involved, and not just for investors, but for the projects themselves. They can actually look at the ratings, the various factors, and look at if there are potentially any weaknesses within their models. So it really gives power to everybody. So it is exciting.
Yes, and I mean, just to add to that, we let the data do the talking. We actually are completely unbiased. We let the data drive this. People can see the factors and can see which factors are driving the rating, rather than people's opinions and noise and vested interest in certain individuals having to provide a certain rating and providing it in a non-transparent manner. So it's all about the data. It is data driven. And it's completely unbiased, but it does have underpinning theory behind it, because we need that level of credibility and that level of experience that has been established over a number of years. And we have combined both of these, and we have produced something unique and something groundbreaking. And this is only the beginning. We have a lot more to do.
Yeah, it's great as well how it harnesses the power of artificial intelligence. So I'm an avid chess player, and I watched obviously Kasparov getting beaten by Deep Blue back in, I think it was 1997. And that was the sort of almost the birth of, well, I mean, obviously it was born before that in the 1950s, but the real birth was in the 1990s. And that's when, you know, artificial intelligent computer Deep Blue beat Kasparov, the world chess champion. And as computing power has increased, the power of artificial intelligence and the different models, and Professor Andros is very expert in this area. We also have other professors who are specialists in artificial intelligence and use the various models. Again, Professor Andros knows better, you know, about even creating our own models, which are bespoke models that work particularly well with this type of data. So it's just very exciting, from being fundamentally based, as Professor Andros said, in all of the literature and academic learnings of the many years, but then also coupling that and dovetailing that with the very latest technology with AI and ML. So dealing with all of that massive data, the more data you can deal with, and it's not possible for a human mind to deal with all that level of data to come out with a rating. But what we've done, what we've created, is actually quite predictive and far better, way better than these TA models. You know, so many people rely on TA, but TA is always backward looking, and that's where the problems arise.
Yes, I mean, we use a sophisticated system of automated AI, where we're actually fitting various different models on the data all the time to see which one is the best fit. But also what we found is that with this particular data, that there are challenges with the data itself, and we've actually adapted, and we will develop our own AI technique unique to cryptos. And we're also going to use various simulations methods like bootstrapping, for example, to improve things further. So we're not just relying on the AI tools that are out there. We actually ultimately want to create our own that is completely unique, because our job is to find the best fit of the data. And if that means that we have to create bits of our own model, then of course we will do that. And we found that it's very interesting, because this data is quite volatile and quite skewed. So that's presented challenges, but in a way has presented contribution and has presented new kinds of models that we are doing. So clearly, and as the data sets expand, that's when the machine learning will kick in even more, because as the data sets get bigger, it learns more and more, and it's able to achieve an even better forecast. So it's a real challenge, but in a way, that's what's good about it and what we are developing. So we're not just relying on sophisticated AI methods. We are actually using a combination of them, and actually ultimately will create our own. And we're working with various people, not just academics. We're working with industrial people. We're working with mathematicians, computer scientists, as well as professors of finance, because we are keen to get the best model, and we will use different minds and different mindsets to achieve that.
That's great to hear. I think it's so often overlooked how data-driven projects really can have this edge in the market. Spending so much time with traders, I know most of the people watching are also traders that are, most of the time price action driven. There's a lot of fundamental traders that base on fundamental analysis, and then when you really get all of this data and they're able to compile it into a system like this, you're almost bringing the best from each world into a system that can kind of almost do it automatically to a certain extent. So can you guys give us like a quick breakdown, or maybe we can go to the video of like just very easily for anyone that doesn't really understand all of the big words that we might have mentioned, what exactly can they get out of Evai, and how can they use it?
Yeah, I mean, probably a good idea is to go through the video, and I think we can explain it through there. That would make more sense, I think. Yeah.
Perfect. So we have it here, and I'll just press play.
Yeah, I mean, I don't know whether you'd like to talk through that, Professor Andros, but basically it's a multi-layered system that assets are rated from A1 through to D. The U that you saw there was unrateable, basically, because there's not enough data. So the highest asset rating is the A1, and it moves down to D, which is the lowest asset rating. I don't think we've ever had an A1 rating actually so far, but the higher rated assets, it actually is very, very predictive. So I don't know if we'll be able to show it today, but with our artificial intelligent models, we've achieved over 86% predictability. And basically, if you can do more than 50%, you can make money in the market. So to actually be able to predict the markets with 86% accuracy is phenomenal. It really is groundbreaking. So the model basically uses various factors. We currently have 9 factors in total. We don't use all of those all of the time, but we are also researching new factors at all times. This is just actually showing some of the actual results of the platform itself. So when upgrades have happened, there have been substantial price increases shortly after. So what's really good about this, it's not like TA, which is lagging and looking backwards. This actually combines everything. And as you said, Julian, it actually looks at a combination of all of these factors, which the human mind can't combine all those things and make sense of it all at once. But also it combines, as you said, traditional TA with fundamental analysis. So you can look at sentiment, which is more to do with fundamentals and more to do with behavior. And then it also combines all of those TA criteria, looking at volatility, momentum, utility, etc. And Professor Andros, I mean, I'll pass over to you, because Professor Andros has created specific models for some of these that, they're quite unique. So I think it's probably good if I pass over to you, Andros.
Yes, I mean, as Matt said, he gave a very good indication of the way it works and the way the ratings occur, and how the AI and ML give you the optimum fit. I think what's really interesting with this is that at the moment there's 9 factors, but there will be more factors, but there's also different indicators for each factor. So for example, if you look at liquidity, we just don't look at one measure of liquidity, we look at various measures. We have got some genuine IP in our models, in that, for example, we have the Gregorio ratio, which was developed for central banks through my Journal of Banking and Finance paper in 2011. For example, is part of the Evai ratings platform. And also the PKN theory is unique to us, because that was, again, my technical analysis tool based on sentiment theory and the Nobel Prize winning research of Kahneman, sort of the psychology of markets, which is also new to us. So in terms of, we've got uniqueness in terms of factors, we've got uniqueness in terms of methodology, and we will also have uniqueness in terms of how we deal with data using various simulation techniques such as bootstrapping to take into account skewness in the data, which there's a lot of skewness in this data because it's a very volatile market. So yeah. So there's a lot of uniqueness here, and there's a lot of IP, and we will continue to have more IP, not just because we want to have more IP, but because we genuinely want the best fit of the model. And we have shown with some preliminary tests on forecasting that we're getting results in excess of 85% in terms of predictability, which, to be honest, I've been working in finance all my life, and I've undertaken consultancy for banks and financial institutions. Anything over 50% is considered really good, and you're making good money. And we're able to show that. And this will only get better because the factors will improve, the indicators will improve, the methodology will improve, and more importantly, as the data is added, the machine learning will come in and become much stronger. So we're doing this all the time, essentially, and it really is unique. And it really is very informative for people, and we really hope people enjoy it and that they make the most use out of it. Really,
this is so incredible. It's so exciting to kind of see this work being done. Specifically, bringing all of these different factors together. I'm sure the TA guys in the team will just get a kick out of this becoming relatively obsolete. But it's just really nice to see all of this bringing like so much data together, really, because I try to do it as a human, and it just becomes so impossible to keep up with everything that is happening. You mentioned.
Yes, sorry. I mean, a couple of things. I mean, the TA guys, there is TA in this. I think this is really important. We've incorporated everything in this. So there is elements of TA. But in terms of, you have to do it using the artificial intelligence machine learning, because quite simply, it's something that you need different combinations and you need to have different fits. And it's the only way this can be done in a very productive, unbiased, and actually sophisticated manner. So yes.
So when you're using the platform, is it similar to something like, I mean, I'll just use TradingView as an example, where you can set alerts, or you could kind of follow certain coins or certain like what trends you're following, or kind of how would a user interact to use it in their best way, or how would you implement it into your own trading system at this point?
Yeah, there are lots and lots of developments that are coming, that are ongoing at the moment. So our development team is working flat out to deliver all sorts of new aspects to it. But you can obviously pick your own little portfolio and follow your own portfolio. You can look at notifications on your portfolio to get various, when you see a particular upgrade or downgrade. And what's really important about this, it's not all about upgrades. I mean, this is quite predictive. So, I mean, just, the proof of the pudding is in the eating. So there've been some really good wins with this. I mean, it actually identified some real big winners in advance of the moves. I mean, there's one actually last week, it's a week or just over a week ago maybe, where Doge was before the big pump that we had. There's some news came out, there's a big pump in Doge, but our ratings picked up before that happened, and it allowed people to get in before that. Sandbox, I mean, I remember there's an upgrade from C3 to A3. This was quite some time ago now. And if anyone had invested that time, I think it's back in October. If they'd invested then, it'd have 345% return by November. But there, when you get upgrades, again with Polygon, we got, if you'd invested $3,000 there, you could have made $361,000. But it's knowing when to get out, and that's where downgrades might be important. But even in today's market, we've seen the bloodbath that we've seen today, and our indicators picked up some of these things before they happened and gave warning signals at the very beginning of the move. So you could basically, we're not necessarily recommending anybody shorts the market, but some people do like to short the market, and you could potentially have obviously made an awful lot of money by shorting the market. But even if you don't want to short, it tells you when to get out. So for me, it's from a trading, from a trader's perspective, you can look at the global rating and see whether the global, how high the global rating is, and that can give you a decision maker, a bias as to whether you should be looking for upgrades or selling downgrades. So what we would normally do, you don't just go for the highest rated token necessarily. You look for ones which have a substantial upgrade, and that means that the outlook for that particular token might have improved dramatically, or obviously a substantial downgrade, and the outlook has declined substantially. And it can help you inform your trading decisions. And also, it's just that there's so many tokens out there. It's good to hold. I would suggest that people diversify their portfolios, and without having proper knowledge and information, and as I say, transparency about all the different assets out there, you're going to struggle to make good decisions. And that's why this is so good, not just for the sort of day trader investor or the retail investor, but it's also very important for institutions. As this emerging asset class improves and sort of evolves and matures over the years, institutions are just dipping the toe into the water with Bitcoin. But in the future, they will be looking at other assets, but they need information about it. They need themselves to be informed. So this does provide a service for every level of investor, and I think it will help the business of the cryptocurrency ecosystem in total. It will help it evolve and make it accessible to everybody, and even for retail investors, it's very cost effective to get that information. It's not as though it's expensive, and it's unbiased. We don't charge anybody, any of the companies that we rate. We don't charge them. We're actually just providing this as a service, and we're turning the ratings model on its head, really, so that it becomes something which provides genuine information that's valuable rather than just potentially paid for information.
Yeah, this is really, really incredible. Can you talk a little bit about how you handle, or sorry, first, I think the first question would be kind of what the timeframes are for a lot of these alerts. Because I know people like to trade different timeframes, different strategies. Would you say most of the ratings or most of the alerts are for kind of midterm swing trades, or are they pretty like short term? How could you use the platform to kind of match what you do?
I mean, being a trader most of my life, I do know that trading costs are a limiting factor. And so I don't agree with people necessarily flipping in and out of trades on a really active basis. So at the moment, the trades, the platform is updated on a daily basis. And we are looking to probably increase the frequency slightly. But I don't think it will necessarily be helpful to have it live, because I don't think it's effective to be trading that actively. So at the moment, this can inform people even on a day trading basis. When you can see an upgrade or a downgrade, you can potentially put that trade on. You can have profit targets for particular trades, or you can use it for longer term. So I'd say, for day traders, but not intraday specifically. Although again, you could potentially look for an upgrade or a downgrade and do a short-term trade. But in general, I would say this is for people talking from day to day, maybe on their trading methodology, and for longer term as well. And we are introducing different categories of ratings where we'll look more at underlying value. So some people might think, well, why is Bitcoin rated, particularly low compared with a lower ranking coin in terms of market cap or something? But we're looking here at the actual profitability or potential profitability, measuring using a number of different factors or many different factors. So Bitcoin isn't necessarily the best token to invest in, and everybody knows that. You can get greater opportunities elsewhere. But we are also introducing longer term underlying value rating factors, which, as I say, this is an ongoing thing. I don't think it will ever be finished, because with the way the AI learns and the way that we can add new data sources and new factors, then I think this will be a complete, it will be ongoing. The same way a human mind can continue to learn, so can this AI model continue to learn.
Yeah, I mean, just a couple of things. I mean, I completely agree with Matt in terms of I don't recommend continuously trading. My whole PhD was on trading costs many years ago, and I found exactly that, because even if you look at it from a theoretical perspective, you should trade constantly. What stops you is the trading cost, and that's why you don't do it. And therefore, I agree with that. Now, in terms of the ratings themselves, Matt's absolutely right. I mean, at the moment, it's picking up sort of patterns, if you like, or daily patterns that are done through the AI. But eventually there will be a different kind of, there'll be different types of the ratings platform in a way. And one will be looking at underlying value. And there might be another one that looks at more of a sort of long-term strategy. So I think the idea is that we want to try and cater for as many investors as possible over different horizons. And we want to try and identify different forms of the ratings to try and cater across the whole market. And this is something that we are doing. And it is continuous work. No research is ever finished. But we are very keen to provide a really strong product and to make it even better. And as Matt said, with the AI and the ML, it will only get better. It won't get worse when the data comes in and it gets even stronger.
Yeah, it's one of those things with AI that just the more you can get, the more it grows, and it gets better and better over time.
Well, if your input is stronger, your output is better, essentially,
Right. How do you do, because you've mentioned like where you get the data and how, well, crypto is just so volatile, whether it's price, but also with just the data, one thing can change pretty quickly. So can you talk a little bit about kind of those sources and how, if that must have been a difficult journey, kind of finding those initial data sets and how to actually source them?
Yeah, I mean, we take data from many different sources, and we're constantly looking for new sources, and we currently don't use on-chain data, but that's something we will be bringing in very soon. So we look for as many diverse sources as possible, but again, Professor Andros will probably have a lot more to say about this in terms of the reliability of the data. I mean, he talks about the more data you get in, rubbish in, rubbish out, they say. But it's actually, so the point is, Professor Andros, and I'll allow you to speak on this as a particular specialist on this area. So I'll pass over to you.
Yeah, I mean, in terms of data sets, I mean, this was one of the challenges we had because, when you look at stock market data, you look at the major exchanges and you get everything. So the answer to the question is we're looking at various sources and we've got it from various sources. But we've also found that there is a huge amount of skewness in the data because of a very volatile market. Now, obviously, in a situation like this, as a researcher, you've got two options. One option is you just say, you can't do it. But obviously that's not really an option. So what we do is we actually use our own sophisticated simulation techniques to try and get the data to the best form that we can that's possible so that we can analyze it. And that is in itself its own contribution. Hopefully, as the market evolves, the data sets will become more reliable and we don't have to use simulation techniques. But we are actually using simulation techniques, techniques such as the wild bootstrap, which is one of the areas I developed, where essentially you've got huge skewness in the data and non-normality, and therefore you have to simulate critical values. So we are using various simulation techniques, and we are also using a variety of data sources. And we look at the data, we analyze it, and we see the quality of it, and we try and get the best data possible. That will improve because data sets will get better, because it's a relatively new market. Stock markets were exactly the same, by the way, going back to the 80s. So it's not uncommon, for example. It's quite common,
Yeah, totally. And you mentioned a little bit on-chain. Have you considered that data set is important? Because I do a lot of on-chain analysis myself, and I find that there's definitely some data sets that can really give an edge. Have you guys found that it does make a difference at all? Or have you started implementing it at all, or just looked into it?
We've looked into it, and there's no doubt. I mean, it's important to see, whale movements and distributions, and there's a number of different criteria and things that you can look at on chain, which are very, very important. And we are looking at integrating that within the model. It's very, very powerful. There are many new data sources that we need to bring in, but that's certainly one of them that's high on the list. There's also other behavioral information, which is actually very, very important. There are various techniques that you can use, which again, there's more and more can be added, but with the actual tools that we have and the model that we have, we can actually bring in these different factors. The model is actually able to accommodate more factors, and the AI can actually accommodate that and actually look at the best balance, because as Andros said, the important thing is actually knowing the right balance, and that actually can change over time. So it's important to have an adaptive model. So again, all of those things are being thought about and being built into the system.
Yes. Yes, yes, absolutely. We are looking at various data sets all the time, and we are. I mean, we've actually constructed our own data sets as well. We've actually, for certain factors, we've had to construct our own data because we feel the data out there is simply not good enough. So we are, when we're actually making a contribution to the databases themselves, to be honest with you. But yeah, we are considering all different types of data sets, and it's something that we are looking at, and we will eventually put them in if we think they're useful and that they add to the model. Absolutely.
Incredible. I was just looking at the assets here, and I do notice you have wrapped assets like staked Ethereum and wrapped Bitcoin. Then those have a slightly different ranking than their like original counterparts. Do you have any comments on that?
I personally don't. A wrapped coin, as far as I'm concerned, doesn't have any particular. I mean, there are utilities for them, but in terms of value, they actually add risk to the token, so they would be lower valued, lower rated. But we've been discussing that today, actually, that we should probably remove wrapped tokens because I don't think there's any value in rating them, to be honest, compared with the real token.
Yeah, totally. I mean, right now, staked Ethereum looks to have a better rating than Ethereum, and I'm sure a lot of people can kind of look at. There's definitely different metrics to analyze both, but it's definitely it becomes an issue when people are trying to get a clean reading on the assets.
Yeah, I mean, you're absolutely right. There's this is an ongoing. It's an evolution that we're having here. So we came out with the MVP last May. So we're actually less than a year from our MVP, and we are constantly improving. And we're discussing this day in, day out about how we can improve it. And obviously the AI can improve the model and the data, the management of the data. But the overall structure, I know you're very much into decentralization, but obviously the model itself has to be built in the first place. But it is totally unbiased. That's where the decentralization bit comes in, that there is no human manipulation of the actual ratings themselves. All there is that we're looking at, can we add other factors, other things that we should do better? And that's where the sort of centralization bit comes in. But more and more, it will become more and more decentralized. So as I said, the ratings themselves are completely unbiased.
It's interesting, the point about the wrapped tokens is quite an interesting one, because in principle, I agree with Matt, the wrapped token should actually have a lower rating because fundamentally it just adds risk. But sometimes you can get discrepancies because there's less people investing in them. So you might, when you get a downside, you may actually have that point of view. I mean, I agree. I think in the long run, it's probably worth removing those because essentially it's the same product with slightly more risk, in my opinion. So it makes sense to remove it to some extent.
That actually explains beautifully why they would be rated differently in an upturning market or downturn market. Whether bullish or bearish, that would actually explain. So it very well explains why there are discrepancies there at the moment in terms of the difference in ratings you'd expect.
Exactly.
Yeah, I mean, it's very curious because, like, just looking at staked ETH versus Ethereum, staked ETH is a yield-bearing asset, whereas Ethereum is not, and maybe that's actually influencing the rating at the moment. However, there is that like single point of failure with the staked Ethereum on how it's relatively centralized in where it's being staked and so on. So there's definitely a lot of things to take into account. I don't know if but that's definitely something that I'm sure you guys are going to be working on in the future.
Yes. But I think like all these things, I think initially you build the model, which is what we've done,
Exactly.
and you build it with a certain reputation and that it runs well, and then obviously you'll adapt. So things like what you rate, the factors, but you've got to start somewhere. It's like whenever I teach students, I always say to them, you always start with a model, and then of course you add bits to it and you make it better and better. So this is exactly what we've done, and yeah. So this is
even Deep Blue, the chess computer, lost in the first place, but obviously it improved, and now obviously there's no chance for a human master to beat AI computers now because they continue to improve and evolve and get better.
That's the machine learning; it learns.
Exactly. So you guys do have a token. Could you guys give me a little more information on the token? Why would anyone be interested? Not necessarily to buy or get exposure, but just how it works in with the platform itself.
Yeah, I think it's it's a really key part of the platform because it provides utility, provides access to the platform. So, for example, the platform, one of the big utilities of the platform will be our AI fund, which is an artificially intelligent fund, which is powered by the ratings. And in order to gain access to the fund, you can actually gain greater percentages of the profit depending on the amount of token holding that you have. So there's some utility there for the token. The more token you have, you can get a much higher percentage of the profit share from it. There's also a sales tax built in, and some of that is reflected back to token holders. So just by virtue of holding the Evai token, you can benefit from that. They also benefit from a share of the actual AI fund itself, which is on the verge of being launched. So from the part of the profits of that are actually shared between any Evai holders. So by the Evai token actually is we launched very, very recently, and it's actually held up very, very well in the markets because we've structured it in such a way that founders don't have any holdings. So founders are remunerated in other ways. So it means there's no dump risk on the token from founders, which is one of the big problems with a lot of the new tokens that come out there, even back in 2017 as well, where founders basically, the minute they can, they dump the tokens and crash the price, and it's the investors who suffer. So we saw that problem. And large investors are also staked over a longer period of time. When I say staked, not actually staked, but vested over a long period of time. So it just means that it prevents dump risk, and that's why our token has held up particularly well during this volatile time. Obviously, it suffered a little bit like virtually every token has, but in percentage terms, we've actually outperformed during this terrible down market that we've had. So there's a lot of utility there. There'll be token access control as well. So we're going to introduce various levels of the ratings. So the more information you want, you will need to hold certain amounts of Evai to be able to access those different higher levels of information. And then for institutional, obviously, that would be the highest sort of level holding that you need to have. So I think it's a great investment for people, I believe. Obviously, we're not here to promote an investment, but as a token, I think there's real utility. And that's really when you're looking at a token of investment, is the utility there? Are the tokenomics right? And yes, I believe we have the tokenomics right with the way we've done it with the founders and the way we've done it with the vesting. Is the project, does it have a universal use case? Well, of course we do. We're looking to rank every token there is in the space. So absolutely a universal use case. So I think it's a very powerful proposition for anybody to look at. And I would, we're currently available on PancakeSwap. We are talking to centralized exchanges. We're talking about partnerships with centralized exchanges, because again, the information that we're giving, that we're passing out, empowers people to make better decisions. It also encourages trading, because when people can see the right assets and when to buy and when to sell and so on, it encourages trading. So it's actually good for the exchanges themselves. It's probably good that the investors and buyers, sellers, whatever, are probably more profitable in what they do and more active. I mean, that's the way exchanges will benefit, but actually it's in that's what I say, that's what I like about this business. There's a benefit to be found for everybody.
Wonderful.
There is, and I'd just like to add, I mean, we have got partnerships with world-leading institutions. For example, we've got a partnership with Peking University, which I think the last time I saw was number 16 in the world. So, it's not just myself that's leading this. We've got other leading professors and other leading academics from, that are constantly improving this tool and are constantly trying to make it better and more sophisticated.
That's great. That's really, really exciting to see so much work going into it. There's a question right here. I'll just put it up. Is there going to be some type of strategy to help investors best use the platform? I guess it goes back to how can investors use the platform in the best way?
Yeah, I mean, we have something, Evai Academy, where we're trying to teach people, first of all, give people a way of education. And we're going to include a lot more walkthroughs about how to use the platform. So definitely, I mean, I think Professor Andros will probably be recording some of those as well. But yeah, it's important to understand it's not obviously being as valuable as it is. It's not the simplest platform in the world, but we tried to make it simple, user friendly, and intuitive so that when you click into a particular asset, you can look at the different factors. But we'll do walkthroughs, and I think we'll create videos, and they're going to be rolling those out as of immediately. We'll be rolling out walkthroughs of how to get the best out of the platform. We already did, by the way. Professor Andros did a great, he's been doing seminars and walkthroughs at universities and so on. But I think we should record those and get them on the site and allow people to learn from it.
Yes, absolutely. We will do that. The other thing to say to people is by all means join our Telegram group, because there you'll be able to see you'll be able to ask any questions to Matt or to myself if it's technical, and we always respond, and we try and be as informative as we can. Also, we have a weekly update in terms of research papers where I post the paper that follows the rating, so people can see the background behind that. But there will be more walkthroughs, there will be more videos as well. But by all means, feel free to join our community, and feel free to DM me, really, with any questions you may have. And as I always say to my students, there's no question that's silly, and there's no question that isn't, because, we are here to try and answer as best we can, really. And we will be doing a lot more of these walkthroughs. It's already been disseminated at various world conferences anyway, but we will be doing more of those. And if the community wants more, we will provide more, because that's one of our objectives, to service the community.
Yeah, so we're also going to be doing demonstrations of actually, we'll create our own little model portfolio that people can follow. They can look at what we're buying, what we're selling according to the ratings. And this will be a kind of showcase, a shop window of exactly the power, what the ratings can do, the power of the ratings, especially when it manifests in terms of a trading portfolio. So we're going to do more and more of that. Obviously, our main focus has been delivering the platform, the power of the platform, but we need to do more on that focus now on marketing and on education about how to use it and how to get the most out of it.
Amazing. So can you guys just tell me where can we find, where can people join? You mentioned Discord. Where else can people find more information?
Yeah, I mean, obviously we've got Discord, we've got Twitter, we've got Telegrams. They're all at the bottom of the site, all the social media links, LinkedIn, Facebook, all of the various links are there at the bottom of the site. So I think you're actually on the ratings section at the moment. So you will find.
Perfect, yeah. So we can probably go to about, and then I'm sure it's here somewhere. If not, it's in the white paper. Yeah, because right now it just takes me back to the dashboard. So
yeah,
but they can find Evai on Twitter. It's pretty straightforward. The site is dashboard.evai.io, so that's definitely an easy, quick way to find at least the landing page for the ratings. Is there any kind of right now with kind of the bear market or just the big pullback that's been happening, is there any comments you have on kind of the future of the market as it stands, or anything that the platform might be able to tell you, just to give a little bit of a taste to what you get access to with the platform to all the listeners?
Yeah, I mean, I actually obviously follow things very closely with the platform, the upgrades and the downgrades. So if you follow my Twitter, I also do a lot myself with Elliott Wave, which is something we might actually integrate into here, because that's sort of behavioral analysis.
Right.
So following my Twitter, you'll see that I've been, especially in conjunction with ratings upgrades and downgrades, been expecting this down market for some time. I was against the crowd who often, many of them live on hopium, thinking everything's always going to go up with the crypto market. It is an emerging asset class. These are risk assets. And with what's going on in the world in terms of the macroeconomic environment, obviously it's not good for risk assets at the moment. So just from a fundamental perspective there's a big downside risk on the market. And because the factors that we have measure so many of these different things and integrate them so well, it is a great way to catch the turns in the market. So yeah, I've been out of the market actually for quite a long time. But there are some ones that shine out, that where you get the occasional upgrade even in the down market, which there's one today, I can't remember offhand what it was, but it actually went up 6% today, where the whole rest of the market was down about 20%. So it's worth keeping an eye out and just looking for those notifications of where a particular asset has been upgraded, or if there been particular downgrade. So yeah, it's very, very powerful, and I think we will put more into teaching people and doing marketing, because it's the more people use this, the more powerful it will become.
This is incredible. Yeah. So any closing thoughts, Professor Matt? Any last things you want to tell everyone?
I mean, the closing thoughts from myself is this is a really revolutionary concept, and it's a concept that is required. Cryptocurrencies are the future. Quantitative easing is here to stay, and we've seen the regulation, and we're gonna it's gonna come into play. We know that central banks are going to have their own tokens. These are all on the horizons. We know that paper money is essentially being printed at unbelievable rates, really, and the value of it is becoming really, really low. So clearly this is the future. We've built something for everybody, and we've built something that's here to stay, and we are really proud to do this and to be the leaders of this, and we want everybody to engage, to use it, and also to give us feedback on it so we can improve it, because that's really important to us. And we really think this is something really special, and something that all of us, I mean, especially myself as the Chief Research Officer, really believes in, and something that we believe is the future. And we want everybody to engage with us, everybody to use it, and hopefully we can make people's lives better and investors' lives better.
And just to give people a little bit of encouragement, my closing thought would be that we were predicting this down market for a long time, but we also predicted that it will end. There may well be more downside to come, because we're in that environment where I think the inflation that we're seeing in the world is probably, a lot of it is externally driven, what with the war in Ukraine, Russia-Ukraine, and the fuel prices and so on. So that's kind of externally driven, but there's no, it's not some of the usual type of inflation. It's not really through excess demand or anything of that sort. So they're raising interest rates at the moment. It's going to slow economic growth. And as Professor Andros said, they're going to have to deal with that. If these inflation issues do fall back and do decline, then we're going to then be dealing with a slowing economy. And so they're going to have to, because interest rates are still almost rock bottom, they're probably going to be looking at more QE. And QE basically provides a lot more money in the world. And money has to flow somewhere, and it's flown into risk assets, even property, stocks and shares. Cryptocurrency is just another risk asset. And so when there's money, when the world is awash with money, it flows into these areas. At the moment, the contracting money supply a little bit, so money's coming out, and that's one of the reasons why you're seeing crypto falling. But they will do more QE in the future at some point. And from a chartist perspective, we've seen that we're expecting these lows to come. As I say, there may well be further lows, who knows? But there will be, I believe, new highs to come in the market. And crypto is the future. Blockchain is an amazing technology that enhances businesses. It makes things more efficient, faster, cheaper in so many ways. So blockchain is the future, and it's just important to choose the right assets. And this is why Evai is such an important platform, because it informs people, provides a level playing field, and just puts power into the hands of ordinary people, just ordinary people who want to do better. So that's my closing comment. Thank you.
Yeah, that was awesome. It's so exciting. It will be very exciting to track how Evai evolves and everything that comes up. So I highly encourage everyone to go to the site, go to the Discord, ask questions, and try out everything. So thank you so much for joining. Unless you had a final comment, we'll wrap it up.
Pleasure.
So,
Pleasure.
Thank you.
Yeah, and also